19,600 to the general reserve from the current year's net profit. What do they mean when they are saying from the current year's net profit? From the current year's net profit, we took the amount from the net profit, right? And we transferred it directly to the general reserve. So you must ask yourself, where do we record the net profit under the statement of changes in equity? Obviously, we record the net profit after tax under the retained income. So obviously, we took the amount from the retained income to the general reserve. The amount is 19,600. So we took the transfer from the retained income. So because we took the amount from the retained income, under the retained income, that amount of 19,000 must be indicated inside the brackets. 19,600 must be indicated inside the brackets. Then we took that amount of 19,600 to retained income. So here is going to be indicated not inside the bracket 600. So obviously the total is going to be 0, like this. It's none, but don't write 9, just write 0, right? Okay, so let's deal with the additional information number 3. They're telling us that the revaluation were done on the 30 June 2014. So the revaluation were done on 30 June 2014. Okay, so this additional information doesn't concern any of the statement of changes in equity. So which means the amount for the general reserve 78,400 is what? The amount at the end of the year. So 78,400 is going to be indicated for general reserve, this amount. Let me try to highlight. So here's 78,000. This amount is going to be the balance at the end, 78,400. Okay, because we have determined the balance at the end of the year, in order for us to determine the balance at the beginning of the year, technically this one is going to be the easiest. Why? Because you must ask yourself, how did they determine the balance at the end? We're dealing with the general reserve, remember. So how did they determine the balance at the end? Because the transfer is not indicated inside the bracket, so which means they took the balance at the beginning, they added that amount of 19,600, they got balance at the end. So right now it's a vice versa, so which means you're going to take 78,400, then you're going to less that amount for transfer, because this time we reserve, we reverse. I wanted to say reverse, but it's fine, slip of the tongue. So this time we are reversing. So we're going to take 78,400, then you're going to, I've been trying this method on how to calculate using this laptop, but I don't know if it's going to work, but it has not been working since. You see, it gives me value, but it's fine. But the answer here, if we take 78,400 we less 19,600, is going to give us 58,800. Please guys, make sure that you confirm with a calculator, because last time I posted a video and a student commented that no, my calculations were incorrect. I'm sorry if my calculations were incorrect. Please, may you try to also pick up your calculator, then do the calculations. If I did wrong calculations, then you can comment, or wherever you don't understand, please comment below so that I can fix the problem. Thank you the students who commented on my last video. I don't remember, but it was last year. Yeah, last year I think they were going to write final examination, so students commented on my last video, then the student said I made incorrect calculations. So thank you for telling me about the incorrect calculations that I made. So with the general reserve, we are done with the column of general reserve. So let's deal with other columns. So here we have the share capital. The share capital amount is 2,352,000. So we're going to check if we have the additional information that must be included or that relates to the share capital. Information number 1, the company was registered with an authorized share capital of 150,000 and ordinary shares of 3 rand each. So here they're only telling us that we have the authorized shares. So the authorized shares that does not affect any of the ordinary shares or the share premium. And I made a mistake there. So which means I'm going to replace the membership with a share premium, because here we are not dealing with members. So I'm going to replace, you know, the reason why I forgot to tell you at the beginning of this video. So the reason why we don't include the members is because of the LTD. LTD, remember, is a public company. Public company, obviously, it includes a minimum of shareholders. So any number of shareholders can be included, 3 to 5, any number of shareholders. So that's why we don't have the members' contributions. I forgot to tell you before I start with this activity, but at least I told you guys that the reason is because of LTD. So you're going to deal with different types of companies. LTD, P2 LTD, that one is a private company. SOC, SOS, that one is a state-owned company. And what as a personal liability company, you're only going to see the personal liability company with incorporated, and the members contribution is going to include CC, close corporation. That's why we're going to deal with the members contribution. For this one, we are only going to deal with share capital. So which means I must go back and deal with I must replace members contribution with share premium. So the amount for ordinary shares was 2,350,000. So even here is going to be 2 million. Is it 2,350,000? 2,352,000, right? 2,352,000. 52,000. So even here we're going to have 2,352,000. So we don't have. So let me replace members contribution with share premium. Share premium. I'm pretty much sure that you all got the reason that I'll show you why we don't include the membership contribution with this statement of changes in equity, because of LTD. LTD is a public company. So we only include share premium and ordinary shares. So let's go through the additional information and find out if there is any additional information that must be included as share premium. So let's deal with a share premium. If you can check, the share premium is the amount of 31,360 on the trial balance. So let's go through the additional information and let's check. We have dealt with the information 1, 2, 3, 4 not yet, but let's see. It says on 28 February 2015, at the end of the financial year, the directors declared a dividend. So here is when we are calculating, when you see the word declared, here we are going to calculate the DOS, what we call the dividends on ordinary shares, right? So the dividends on ordinary shares is going to be calculated, and I think I forgot to mention it, to include it under the statement of changes in equity. The DOS must be included under the retained income. So I will include the additional information, but I want us to firstly deal with the share premium. 5, no shares were issued. Oh, there were no shares that were issued. Okay, I think everything here is going to be smoothly because no shares were issued, so we don't have to calculate the shares. That's pretty good. So the amount that appeared on the trial balance at the end of the financial year was 3-1. It is 3-1. Sorry, let me try to fix something here. Here we go. It was 31360. 31360. 360. So we have been told that no shares were issued. You see, here we have the shares issued, but we've been told that no shares were issued. So which means the balance at the beginning is going to be the same amount as the balance at the end, 360. Okay, so let's deal with what? The retained income. With the retained income, I forgot to mention the DOS. Remember, we were supposed to prepare the what we call the DOS, right? The ordinary shares. So the DOS, dividends, what we call the dividends. So I forgot to include the dividends. So because we don't have the contribution to members, I will cancel this item and write ordinary shares or dividends. Let me write dividends. Okay, so dividends always is going to be indicated inside the brackets when we are dealing with the retained income. So there was the additional information that tells us that we issued, the directors issued certain shares and the certain amount of shares. Yeah, so let's go and check that additional. Okay, so here's our additional information number 4, where the information says on 28 February 2015 the directors declared, and I told you that for the word declared it means that we are going to calculate what we call the DOS, dividends on ordinary shares. So a dividend of 15% was issued and it must be provided, so it must be recorded as follows. So which means here we're going to calculate the DOS. Let me tell you, when you're calculating the DOS, you're going to calculate the DOS. We only take the amount, the total amount of the ordinary shares, right? The total amount of the preference shares we multiply by the percentage that will be given, and also take the number of ordinary shares we multiply by the cent that we have that have been issued by directors. So in this case, if we can check, it says directors only issued 15 cents. So I will start with the ordinary shares. So the information says the ordinary shares that we have, right, on the trial balance, we only have the total amount of 2,352,000, right? So in order for us to determine, when we're calculating the DOS only for share capital, we decalculate the DOS with the number of units. So we're going to take 2,352,000. Looking at the additional information number 1, we've been told that the authorized shares capital for ordinary shares is 3 rand. So we divide it by 3 rand, then we'll get 78,400. So this 78,400, we're going to take 78,400, we multiply by 15 cents, so it's going to be 0,15, right, to get 11,600. I repeat, when we calculate the dividends, we only take, for ordinary shares, we only take the number of units and multiply by the cents that were issued by directors, then to get dividends. So if we had the preference shares, we were only going to take the total amount. So I repeat, let me repeat, we're going to take 2 million, the amount for share capital at the end of the year, 2,352,000. we're going to divide it by 3. Additional information number 1, we've been told that the authorized shares for ordinary shares is 3 rand. So here we determine the number of units, then the number of units, we're going to get the number of units. Then after getting the number of units, we're going to take the number of units we multiply by 0.15 to get 11,600. I hope you all get the calculations. So the dividends, we are going to indicate the dividends inside the brackets, and we have 11,600. So we close off the brackets. So we're going to determine the total for retained income at the end of the financial year. So which means you're going to take this amount of 182,574. You less, I forgot one item, the net profit after tax. So let's deal with the net profit after tax. Okay, so it's going to be easy for us to determine the net profit. Why? Because the additional information number 6, we are being told that no, the net profit after taxation for the year is 156,800. So we don't have to calculate any net profit after tax. Why? Because we've been given the net profit after tax. But sometimes you may not be given the net profit after tax, so you have to do some calculations. But I'm pretty much sure that your lecture will teach you on how to calculate the net profit after tax. But I think for the previous knowledge that we have, you know how we determine the net profit after tax, because you take the net profit before tax, you less the income taxation to get the net profit after tax. But if you still don't know how to calculate the net profit after taxation, don't worry, I'm here for you. So we're going to take the net profit before tax, you less the income tax amount you'll be given there. If they did not give you the income tax amount, they are going to give you the percentage. So let me just say you've been given the percentage of income tax, which is 26%. And if you can check your trial balance, you've been given the net profit before tax amount. So in order for you to determine the net profit after tax, firstly we have to take the net profit before tax amount and multiply it by the percentage of the income tax to get the income tax. So the formula for us to determine the net profit after tax, you're going to take the profit before tax, you less after tax to get the you less the income tax to get the after taxation. I'm not sure if you understand me, but if you don't, I will just leave the formula on the comment section so that you can all get it. So we have been given the net profit before tax 156,800. So 156,800, 156,800. So in order for us to determine the balance at the end, we're going to take this amount of retained income at the beginning, you're going to add the net profit after tax, you less the transfer, you less the dividend to get the balance at the end. So the balance at the end is going to be how much? It's going to be 202,174. 202,174. So let's deal with we only left with what? We are done with the share premium, retained income, revaluation, we are done. So I think we are done with everything here. The only thing that we're left with is the total. So with total, I think we're all going to get the total Why? Because with total you are just going to get, but I'm not going to show you on how to calculate the total. We're just going to take the balance, or you add all the balances at the beginning to get total. You take the net profit amount the way it is, you paste it there on total. The transfer is 0, then we have dealt with that one. So the dividends is 117. I'm going to paste it the way it is. Same applies to revaluation, and you get the total at the end. So family, I really appreciate, and I would like to thank you for the subscription. Thank you very much. They really mean a lot to me. So thank you very much. I will see you on the next video. Enjoy. And 5 students, here is the study guide, and you will get the solutions, the activities and the solutions, and also the assignment or the activities that you can test yourself after doing the activities.